Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, May 24th, 2010. Well, here we go, folks. The market's actually quiet today for a change. This has been a far cry from what we've been used to over the last 3 weeks to 4 weeks in this market, as the volatility has been off the charts. Today, actually, the markets are staying in a very, very tight range from what we're used to seeing. As you can see here, the intraday SPY trading in a very, very tight, about a 1 point range on the SPY. We started out with a small little gap down, sold into these dual moving averages, the 20 and the 50 moving average. Good consolidation. Now, by the way, the consolidation is telling you something in this respect. All right, now I want you guys to understand this based on a technical analysis point of view from the methodology that InTheMoneyStocks.com preaches. You see this big move up on Friday into the close. The consolidation here, the small little candle sideways to lower into those moving averages, are considered an in spirit of bullish flag pattern. Now, that tells us that, again, a bull flag, because of the term, obviously, bull, means that you start to look to the upside. And notice how between here, you have the big red candle, all those bars are inside of it, right into those moving averages. They begin to advance higher, and you start to move up. 1, 2, pause candle, 3 up. A nice move, basically a dollar off the lows, or a dollar move on the SPY to the upside. That's the equivalent of almost 10 points on the S&P 500. So sure enough, we inch up here. We turn to the positive side briefly. The market starts to stall out, like right at that pivot from yesterday's, or make that Friday's high in the late afternoon, last candle of the day. Notice how this high right here matches this high. At that point, that's resistance. You start to consolidate and pull back. You pull back again into the moving averages, just above the 20 moving average. Then the market again starts to float higher. This time you take out that pivot high. This is the one hit analogy or methodology of in the money stocks. The first hit is shortable. Second hit, which would have been right here, you do not short. As you can see, it goes above that level and goes into the absolute high from Friday next as your next point of interest. From that point on, you start to just consolidate and chop sideways. The market starts to pull back a little bit. We pull back and get through the 20 moving average, coming down to the 50, and are now consolidating here. Right now, this is actually a small in spirit of bear flag. However, and I repeat this, however, because of the volume is so light today, do not expect the bear flag to necessarily play out today, all right? Whenever you have volume this light in the markets, and again, it seems like everyone is just taking a little bit of a chill today, from the craziness of last Friday, Thursday, and all the way back all of last week. It seems like today people are just sitting on the sidelines, not trading at all, and that's letting this market kind of go sideways in a tight range. Bear flags, when light volume is present, oftentimes do not play out on that direction. So just keep that in mind, guys. I think it definitely is a very, very important little idea to understand in regards to the light volume of this market. Now, what are you looking for resistance support here? If you start to move higher, you're going to look at the double top from this morning's high, also from Friday, as being your key resistance level. That's at 109.35 to 109.40. If you take that out, you're going to start to look for this next pivot blue line right up here, which happens to be at 109.75, and then ultimately a move possibly up to the 200 and the second blue line, which would be around 110.40. Those are your upside resistance levels going into the afternoon session. Overall, I don't anticipate any big movements like that into the close, mostly because, again, the market is light volume. I think the market can usually stabilize here and not really sell much. If anything, it'll inch up a little bit, but I don't think a big move is in order. Again, a move to the 200 would be kind of the extension of the biggest move I would expect today, and I don't even expect that up into the close at all. On the downside, should this in spirit of bear flag play out, you're going to look for a pullback below the 50 moving average. If you get below that, you could actually come all the way down into the low of the day right here. The low of the day being the 108-ish level. If you get through that, you're going to retest the slanted trend line and the green line right around 107.65, which would be a new low of the day, and right into the pivot point from Friday afternoon's late day drop before that pop into the close. All right, so that's your intraday analysis. Again, notice the volume. How light is that volume? It is insanely light today. By this time on Friday, we did about 300 million, I feel like, on the SPY. Today, you've got 182 million. So about half of the volume is traded today that we saw on Friday afternoon session or Friday during the day. Now, let's go to the 60-minute, quickly touch base on the 60-minute. The interesting thing here is you could actually make a case that you're consolidating in a slightly bullish manner from the gap down on Friday. You had the big gap down on Friday, the big move up, and then from that point, you've gone sideways, essentially, chopping sideways. It's not a very pretty pattern, but it is consolidation off of that move. That could tell us that, again, an up move is coming in the next few days. Your first target on the 60-minute would yield a move right into this level of 109.85. Then you have the pivot low right here at 110.40, and then ultimately gap fill would be your next spot on the upside, and that would take us to 111. 1180 or so on the upside. Also, the 50 moving average is right in there as well. Now, let's talk about a few different stocks that are making a move today. First of all, the big things, the big stories of the day are the dollar and the euro continuing. The dollar is very, very strong, although off the highs of the day. That's putting pressure on the euro, of course, or the euro weakness is putting pressure to the upside on the dollar, whichever way you want to talk about it. As you can see, the euro is getting pounded today down $1.71. Now, again, it's on a pullback here, which is an interesting play. I think it might be a little bit of a short-term buying opportunity on the euro, but again, we'll play it into the close and see how it develops. Again, we made a lot of money last week on this play, given to the Research Center subscribers and the intraday stock chat as well, and I'm going to look to take advantage of all these different moves again this week. Last week was a huge money-making week. This week is expected to be just as big. Again, volatility should return by midweek or so, and again, then later in the week on Friday, going into the long holiday weekend, you may have a quieter day on Friday, depending on how things shape up. All right? But nonetheless, euro and the dollar on opposite spectrums here with pretty solid size moves in both directions. Next up, let's talk Goldman Sachs. Goldman Sachs has initially started out stronger today after a big move up on Friday, and it now is weaker, down about $2 and change. JP Morgan is down $1. You can see the financials again under pressure. Wells Fargo down $1 as well. All these financials under pressure as again it looks more and more secure that this financial regulation is coming through the pipe. And again, a lot of people are worried it's going to cut into profits overall. All right. Lastly, what I want to just discuss, Exxonmobil. You're seeing Exxon doing slightly to the negative side today, down about 20 cents. Not a major move here. And again, the key is going to be the USO. Even with the dollar higher today, the USO is basically flat on the day. Oil's essentially flat on the day. Therefore, you're not having a major impact on Exxon or Chevron. CVX, I can punch up that chart. You can see Chevron is just slightly lower on the day, kind of matching the indexes. Just to give you an idea here, the Dow is down about 35 points or so, it looks like. NASDAQ is up actually 10, as again, Apple's leading the charge here, and the S&P 500 is down about 3.5. Just take a look at Apple today, really the leader of the pack today, up about $7.75. Truly an amazing move on Apple, considering the recent weakness in the overall markets. All right, folks, that's all for today. Come join the Research Center. Come join the Intraday Stock Chat. Money there to be made, hand over fist. We'll see you there. Take care.